Welcome to the Farming Without the Bank podcast, the show with a no BS approach to money, hosted by a farm strategy expert and authorized IBC practitioner. Join us as we get real and expose the flaws of traditional financial institutions in order to help farmers take control of their finances, create peace of mind, grow their wealth, and leave a legacy. Now, here's your host, Mary Jo Ehrman.
Hello, and welcome back to the podcast. Thank you very much for being here. I appreciate it. And so today, let's talk about the inevitable question that some people are actually scared to ask. And I don't know why. Like, there is not a question that you should be scared to ask me. A lot of people even ask me how I make my money and what I get paid for commission. And I am super open and happy to answer that question. But this is one of the questions that people are scared to ask. And I don't know if it's because they think that I'm going to lie to them or that agents are slimy or whatever. I don't know. But whatever. The question is, what does a life insurance company do with my money? And so when we look at policies, it looks too good to be true, right? We have these illustrations and these are the projections going further. And what does that look like? How do they guarantee that money's going to be there? What are they doing with our money? Because we have there's this talk out in the world that life insurance companies are just making a bunch of money and they're just blowing it, right? And I don't know where that came from. That it's really just ignorance when somebody says that, because they truly just are repeating garbage that they've heard, because life insurance companies have to pay claims. They have to be able to manage the money so that all these claims can be paid. If a company has never missed a claim, then that means they're managing their money correctly. It's not like we are a bank and we're mismanaging money. It's not like we are stockholders and they're mismanaging money, right? They're not the Enrons of the world. And so where that perception came from, I'm not sure why people think that life insurance companies are just getting rich, because they have to pay claims. They need the money. So what people say is, well, what are they doing with my money? Because they have to have these guarantees. And so when you pay your premium, the life insurance company uses that money to buy bonds. They use it to buy real estate. They're doing things with that money so that they can get this guaranteed return to offer that guaranteed return back to you so that your policy grows at that guaranteed rate. They also then pay dividends. So if they've lent money to somebody for real estate, if they have bought bonds let's say they have bonds at 10%, but they are guaranteeing that you're going to get 4% on your money, then they have a difference there that they can go buy more bonds with, right? That they can pay claims with. There is a certain amount of money in their general fund that's what they use to borrow and lend back to you. And so it's good to know what they're doing with their money. I want to know what they're doing with their money because I want to make sure that they're managing that correctly, that they're not buying risky investments, that they're not doing things with that money that's going to cause them to financially be in a shortfall, or financially they're going to end up closing the business, right? That's what we should all be asking every single person we give money to. I don't care if you're giving money to a financial advisor, you should be asking, what are you doing with that money? Here's the challenge for me, and I've talked about this before, is that people ask me, what is the life insurance doing with that money? This is too good to be true. But those same exact questions are not being asked of your financial advisor. You have 100% blind trust over there. If we actually started asking any financial advisor what they're doing with our money, and they would have to explain, they would probably start doing a better job. They would probably take it a little more seriously. But because they're never being asked, they don't need to explain it to anybody about anything. If they lose money, it's just okay. when you do ask them, then they get defensive because it's not the norm. It is super normal for me over here to be asked all those questions, because when people start seeing what I'm doing and they think it's too good to be true, then we start asking questions. The stock market should look like it's too good to be true, but it's not, right? As soon as we give money to somebody that they actually make money, then we start asking questions about why. How are you able to do that? Because we're so ingrained to believe that it's not possible. I don't care if it's real estate. I don't care if it's a stock market. I don't care what it is. If we're gambling and we go to the casino and all of a sudden we're making money, we're going to ask, well, why? What are you doing? Are you cheating? What's happening? Right? So a lot of people are going to, and this is going to be a super short podcast because, well, maybe I'll do another frequently asked question here, but it's just that simple. They are using that money to buy a bond because they have a return that they have to guarantee you at a gross rate. Now, that's a return on a gross rate. So I'm not talking about a specific rate of return. Every policy has a gross rate that they have to guarantee. That is not the net. So everybody's net is going to be different. That is why I do not give you a specific number for a rate of return. If somebody's giving you a specific number for a rate of return, it's just a lie. They just grabbed the gross rate, but that's not what your actual rate of return is within that policy. And then let's just go back to where they're getting the money for loans. That is just their general account. That is where the money is sitting so that it is accessible when you need it very, very quickly. And so if there is more borrowed than they're going to have to sell off some bonds or their whatever. Policy holders are always number one in line to access money. So if you need it, they have to have it there. Unlike the bank, who doesn't have to have your money there. You're going to have to wait for them to go get it, right? Because they don't have the cash on hand. Or, the FDIC, let's just talk about them for a minute. So the FDIC, if the bank goes under, they have 10 years to come up and replenish any money that was in there for insurance purposes. You get access to that money first because it is your cash value. Okay. So that is another question that we get a lot as well. That's it, you guys. This is like the shortest podcast ever. It's that simple, and I don't want to complicate it. So let me know if you have more questions, comments, concerns, whatever. I am absolutely happy to address those. And maybe these shorter podcasts are going to be exactly what you guys need so that I'm not killing the subject. Okay, let me know. Otherwise, you have a fantastic rest of your day.
Thanks for listening to the Farming Without the Bank podcast. We hope today's episode has inspired you to take control of your finances in new ways. Don't forget to check out our website, farmingwithoutthebank.com, and engage with us on our Facebook page, Farming Without the Bank. Join us next week as we smash more financial myths and empower you to accomplish your financial goals.